All right, everybody, it's me, Gregory Mannarino, and it is Wednesday, February 17th, 2021. Right off the bat, people, the 10-year yield, 1.31, and the U.S. dollar is stronger here. It is time to exercise a little caution with regard to this market. Now, I am not saying, because I know my words get twisted, we're about to crash or anything major is about to happen. We don't know, okay? Like I've been explaining to you over the past several days, this is no man's land. There's nothing to gauge this by where we are. All we can do is look at the dynamics that move this market and try to come up with what appears logical. Now, this environment is, well, it's unique, as I just covered here. And the fact that we are now seeing the 10-year yield rise like this with a dollar getting a little bit stronger, to me, this is, I wouldn't say this is a red flag, but this is a caution flag or maybe a yellow flag. So what does it mean for people that are involved in this market on the long end? Well, if you have a profit, it might be a good idea to pull those profits. If you are long the market and you can't pull profit for whatever reason, it might be a good idea to hedge your positions. You know, let's just talk about hedging real quick. It's not hard to hedge your positions or put yourself in a spot that if the market does turn against you, you won't suffer a major loss. I cover hedging, the most simple way to hedge on the planet, in my new book, A Not So Random Walk on Wall Street, which you can get right off of my website, traderschoice.net. If my lions out here who have my new book, A Not So Random Walk on Wall Street, read the section on hedging. You understand? Very simple. Okay. So again, no red flag here. I would say a caution flag. Let's see how this plays out. Several weeks ago, two weeks ago, I explained to you there was a ton of momentum in this market, and that's why we hit record high, record high, record high, record high. Well, that momentum is definitely slowing down in the light of looking at the 10-year yield and the dollar. And we also understand, people, that no asset goes straight up without a corrective phase. These corrective phases are bullish. Bullish. So, I personally would love to see this stock market fall a little bit. It would give me an opportunity to buy assets cheaper. I would add to current positions on that dip as long as the trend remains higher, as long as I would see the 10-year yield drop. You understand? Let me cover that again real quick. Let's say we do get a drop in the market tomorrow, today, next week, and we see that 10-year yield fall. To me, that would be a buying opportunity for the market, because look, we understand that more debt than you can possibly imagine is going to be added to the debt we currently have. It's the goal of the central banks to continue to inflate, to continue to buy it all. By the way, the producer price index came in today, and it did show that we are unfortunately seeing inflation despite the fact that the money velocity is dead. We also found out that retail sales came in a lot stronger than expected. I don't really know if I trust that data. However, in this case here, we do understand that people are spending those stimulus checks. Okay, maybe it's true. Whatever, good. It's all good. But again, going back to this market. So again, no red flag, caution. Think about where you are in this market. If you need to hedge your positions, close positions possibly that have a profit here. Now look, nothing may happen. Again, this is no man's land. But to me, watching that 10-year yield, watching the dollar here. I don't like it. I don't like it, like I've been explaining to you. And the higher that 10-year yield goes with the dollar in tandem, the more I don't like it. You understand? It's very simple, and there's nothing wrong, nothing, with getting yourselves in the right spots to weather anything, all right? Anything. That's what this is all about. This is a strategy of how to stay ahead of the perverted, twisted system, all right? Let's move forward here. Cryptocurrencies continue to get bid higher. Bitcoin, 51,000. You know my take on it. I would like to see a pullback here. It would be bullish in my view. Gold and silver under some pressure right now. Why? Because of the dollar strength. Crude oil. Brent crude is like $64 a barrel. I mean, this is just a game that they are playing with crude oil. It's the lifeblood of the military-industrial complex. They will prop up crude oil by any mechanism they need to do it. If they got to attack a crude oil carrier, a refinery, if they have to find a reason to prop up crude oil, that's what they will do. It's a game. It's a dangerous game, and people can and will get hurt, but that's how it plays out. It's very, very, very sad. But that's the system. It's so twisted. It's so perverted. And again, pay attention to what comes out of the mouths of Federal Reserve presidents. Yesterday we had Fed President Bullard explaining, okay, you know, the Fed does not see asset bubbles. They're blind to them because they're inflating them. The Federal Reserve has deliberately suppressed rates now for over an entire decade to inflate a stock market bubble, to inflate a real estate bubble. But you see, he can't tell you that. You understand? And with regard to, what was her name? The other Fed president, Creature, that came out yesterday. She had said that, you know, we don't see a problem here with the 10-year yield spiking like this. Of course they don't, because this is a setup. It's always the same scenario here, a wealth transfer from one group of people to another. That's just the way it plays out. It's always the same. Anyway, so just in summary here, pay attention to the 10-year yield and the dollar, all right? And you can see this right on my website, traderschoice.net. There is a link in the description of this video, top of the second page. Also pay attention to crude oil, the unholy trinity here, all right? If you got the 10-year yield doing what it's doing now, rising, the dollar rising like this, it's just not good. You got crude oil getting propped up. Okay, that gives a boost to the energy sector, that gives a boost to the financial sector, and it may put a bottom under the stock market, but we'll see. We'll see how this plays out. We got to watch these things. We got to think ahead. We got to understand where we are, what we are doing, and how to prevent ourselves from suffering losses. That's really what this is about. Again, where are the opportunities? The opportunities are everywhere in this market, and there's no doubt about it. With regard to precious metals, again, they're under pressure. Take advantage of this. They're going to play their game. We will continue to play ours. It will not stop because we understand the grand plan. The grand plan is for central banks to vastly, vastly inflate. If they're vastly inflating, we want to take the opposite side of that trade. You understand? We want to hold not undebt units, gold, silver, platinum, palladium, more specifically silver. These are units of wealth. They are not units of debt. You understand? They're not owed back to anyone, plus interest that they create out of thin air. You understand? So I think you get it. All right. So with that said, people, keep your eyes on these things. And we're just going to watch it. We're going to see how this plays out. I will keep you informed. I will see you later for my post-market wrap-up, and we'll sum all this up, and we'll see what other information we get out of today's trading. All right, with that said, out of here. Love you a lot. Please share the video.